Okay, what I wanted to was go over today was now the market just opened at 6 p.m. was a review of how our quant lines did last week. We did a lot of tweaking of them, and on Monday and Tuesday we really weren't prepared to trade them. But then on Wednesday, Thursday, and Friday we were set to go. So let's take a look. Now, does everybody in the room? Hey, good evening. Okay, thank you. Now, does everybody know what the quant lines are? Because I don't want to go over anything that people already I don't want to be redundant. Okay, does anybody not know? Okay. Well, what we did was, okay, we sorted out the markets that are in line 1 and line 2, changed their speed, and now we really have them down perfect. And on Wednesday we had 6 wins and a loss. On Thursday we had 5 wins and a loss, and on Friday we had 6 wins and a loss. I'm sorry, we had 6 wins. I think we had 2 losses. So what I wanted to do was go over the trades as they set up and confirmed via the use of the quant lines. Now the quant lines do a quantitative analysis of multiple markets that either move in the same direction as the ES or in an opposite direction. We'll go back to the beginning of this day. Take a look. Why don't we start? This is on 5-6. Excuse me. So let's take a look from 5-6. Now on 5, now we have on the ES. We just created one on the Nasdaq, and we're in the process of getting that one perfected. And we have one on the NQ on the Russell. The ES and the Russell have 2 lines. They have a major and a minor line. Our ones on gold and crude have 1 line because we could only find 3 correlative markets. On ES and TF we have 5. So we've split it into a major and a minor line. Now, the major line is the most important of the 2 lines. They have the markets that correlate the tightest and are the most important that you want moving in your direction. But what I've seen is if the market setup is perfect, like this trade right here, which is at 940, you can take the trade with a minor line. You can see right here, you have the major line flat. Now the correlative markets here are not moving against you. They're just not moving with you. And the more I look at it, the more I see that the minor markets do play a significant role. And when you have order flow and momentum, the candles outlined in red, and you have this background bias, which is the strongest background bias. It means you have price action, market structure, the 15 and the 50 are down on multiple time frames. You've broken all support, and you're really free and clear to move to the downside. The single minor quant line is enough to take a short. And you can see here, this is a really pretty setup for a short on the ES, confirmed by the minor quant line, flat on the major, and it was a big winner. 5.5 points. Now at this point here, we're oversold. We're not going to take another short, even though the dual quant lines are still telling us the market's going to go lower. And the fact of the matter is, it does go lower, and it still would have given us another win. But this is a much riskier short, one that we wouldn't take. Then we have the modified 15 go flat, and we don't trade a yellow 15. And this is unfortunately a very nice trade, but we just don't have. We have the yellow modified 15, and we just don't have our own confirmation in order to take it short. And when you trade with specificity, sometimes you just don't have the ability to get every winner. And this was just a very, very nice trade. We have chase dots that allow us to trade on a yellow modified 15. We did not get one here, so we don't have the ability to take this trade short. Now here's another trade. I don't remember if we took it in the room or not. But now you have dual quant line confirmation. Now the thing that I think that held me up from taking the trade was that it was 5 ticks off support. And I didn't have background bias. But really what I want to focus on here really are the quant lines and how well they predict the direction of the market and how much they offer us in terms of predictive ability in getting us a winner. And you can see here that despite the fact that there's no background bias, and despite the fact that we're almost a full candle off support, we get a 4-point winner. And the dual quant line is really, really an extremely potent signal. It means again that you have 5 markets either moving in the direction you want or moving in the counter direction you want, and you're very, very likely to get this move up. Now, all the markets, none of them are assessing any price action on your chart. They're all analyzing price data, price movement, candlesticks from other charts on other markets moving at other speeds. So this move up didn't turn these lines green. These green lines confirm the fact that this C candle was going to be a winner. Now this is a very aggressive short on dual line with dual quant confirmation, and if you took this trade here, you would have gotten the loser. It would have taken you out by 1 tick. If you took this trade, you would have had a winner. Now the thing that's really important is you don't look for dual for the dual quants to line up and then take a trade. You look for a perfect trade and then look down at the bottom of the chart to see if that perfect trade is confirmed by the dual quant lines. Now here's another trade. Whoops. That I had pointed out to the traders in our room. We have minor quant line confirmation, and it's not a huge trade, but it's a nice winner. The red and green crosses actually I haven't really focused on them, but they really have more predictive, it's a point and a quarter. They really have more predictive power than you think. And I'm going to go back and show you. If you see this trade, there's no cross. And you get ticked out of that trade by 1 tick. On this trade, you do have a cross. And what the cross means is the 3-line indicator assesses order flow and momentum from multiple time frames. But what I did was I wanted to see if adding additional time frames and creating a momentum signal actually had predictive power, and I believe that it does. So when you get a red cross to the downside, now we've taken off all system-generated short trades and long trades, because basically we're trading the dual quants, we're trading market structure, which is really based on our background bias, our 15 to 50 in our trading chart, and we do look for order flow and momentum to be on our side by outlining the candles in blue, although we've taken the 3-line off. The only additional signal that you get is when you have momentum line up on 4 time frames. On a 5 range, this indicator looks at momentum on the 8, the 13, the 21, and the 35. Those are the 4 next fib numbers. If momentum is aligned on all of those, you get the X. And if the trade is a perfect trade, and you get the X, it's going to add to the predictive power of the entry because you have momentum aligned on a lot of time frames. So you can see that this trade that failed, this is a trade that I probably would have taken simply because I have background bias, I've got dual quant analysis, and I'm certainly not going to be the one to say to you that every time you get this lineup, you're going to get a winner. I will say to you every time you get a lineup like this, you're going to get a winner between 80 and 85% of the time, maybe even 90% of the time, but you are going to get an occasional loser. Here's one. This one had a momentum signal. This one had a momentum signal. But they actually do help you if you take a look at the trades. And you can see here, momentum usually does align on a C to the downside. That's successful. And if you have the trade with you, it does really help. Now here's a trade to the downside. You have the minor quant line. You get a winner. Here's a trade to the downside on a yellow 15. Here's a trade to the downside, dual quant lines. It's a winner. Now here's where you get a chase dot. And when we really take the chart apart, we can really see if we have any losers. That chase dot gives us the ability to go short on this break of the 15, even though the 15 is yellow. You have the best background bias. Dual quant lines are telling you that you're heading down on every market you want or heading up, and you get a huge winner right here. So you have the same thing here. Here's your trade. Now that's a good trade. You have retrace right back up. Whoop. Now if you look on this B, the quant line takes you out of trying to take that retracement. Here's a move to the downside. Here's a move up. You have a B candle. But the major quant line on this trade is, no problem, is green. You're never going to trade a short trade off a green quant line. So here's where a green quant line censors a loser. And that's exactly what we wanted to do. This is a valid retracement and a valid continuation trade to the downside on this B. But if you look at the quant, the major quant's green, you're not going to take this trade. Then, if you wait for this line, for this candle to develop, now you have dual quant line confirmation to the downside on both time frames. And perchance, if you miss this entry, you have the chase dot, and you can go down either here, or you can go down here. Either one's going to give you a winner. Optimum entry is going to give you a much better winner. And you really shouldn't miss. The ES usually doesn't move that fast. That's 3 1/4 points. Now you're way oversold. You got to wait for retracement to take another trade to the short side. Now this is a yellow 15. We don't trade it. Here's another trade. The move to the downside, the move up. Now you've lost your background bias, but you see the candle still outlined. In order flow and momentum. And you see how key the dual quant lines are. Oh, you do have background bias. It's just lighter. It's a little less powerful. But with this nice retracement up, order flow and momentum with you, candles outlined in red, and dual quant confirmation, down you go for another winner. And this is all in one day for 3 1/4 points. The only thing we could find was that one loser that took you out by a tick. Now you're 16 ticks off the 15. The difference between the 50 and the 15 here is 16 ticks. Optimally, on an 8 range, you want it to be 13. So if you took this trade, the move down, the retracement, and the continuation short, you'd be taking it in a bit of an oversold market. Now, these are the kind of trades where if you assume the additional risk of trading an oversold market, it's really the kind of borderline trade where you can absolutely take it. You have a lot going for you on the trade. You have the strongest background bias to the downside. I mean, the platform is very clearly defining risk for you. Yeah, you have the best color background bias you can. Price action and market structure heading down on 2 additional time frames. All support to the downside is broken on additional time frames. What we look for on the ES is we take 2 contracts out at 3, 1 out at 4, and 1 out at 8. We have a very modest ATM on this. So on this, if you took this slightly oversold, it would have gone 13 ticks. We would have been all out at 8. 2 points is what we're looking for on this trade. Now we're looking at every single potential setup on the chart. Now here's a very, very aggressive long. You have the break of the 50, retracement right back to the 50. The 15's crossing, which is really key. You want the 15 above the 50 on a long. You don't have background bias. You don't have order flow and momentum. You do have dual quant confirmation. And this is at 1535. So it's getting later in the afternoon, but this is definitely a tradable setup. It's just a little bit more aggressive as long as you understand it, that it comes with a little bit of additional risk because you don't have order flow and momentum and you don't have background bias. It's definitely tradable. The dual quant lines really make this trade advisable. It makes it something that I think is very reasonable when you have all 5 markets moving in the same direction as you. And structurally, it's a nice trade because I really like the trades that break the 50, retrace right back to the 50, and use the 50 and the 15 as support. So you have 2 major trend lines. In fact, the only 2 we use to support the trade to the upside, and both quant lines are telling you that this trade should go to the upside, and it does. Now we break here. Now here's another tradable setup. You do have the 15 green, and you could take it to the upside, and that would have been another winner. Unfortunately, on this trade, you've got a yellow modified 15, no chase dot, no background bias, and so it's a big winner you just cannot take. Now this is after hours. You can see you're at 50. You're at well, it's getting. I think volume is gone completely if you look at the volume indicator. So I don't know. This would be a point where you would even be trading anyway. So let's just go to the next day. Beautiful move here. This is where you get the consolidation going sideways into support right here. The move up off of support. Dual quant line confirmation. It's early in the morning. It's 7:16. But if you're really up early, basically this is your whole day. You could be done before the NYSE's open. Now this is a very, very big move. It's almost 5 points. And if you took the retracement and went back in here, you got another huge move. This would have taken you all the way up to here. No reversal candle here. Now really what I'm looking for is a signal. Now here's a great signal at 9:41. This is a gorgeous break of the 15 with order flow and momentum, dual quant line confirmation. You're plenty of space between the opening of the market. It's been 10 minutes, and up you go. Now we're on a yellow modified 15. You see on this particular trade, this is another break of the 15. Dual quant lines are yellow. absolutely untradeable. If you're going to take this long on a break of the 15, you have the darkest background bias, it's green, which is the green, order flow and momentum with the trade. This is a valid break of the 15. You look down at the dual quant lines and they're yellow. And you do not trade a dual yellow quant line signal. So again, if there's any potential for you taking this trade, it's gone if you look for quant line confirmation. And here's a trade that will be very, very aggressive without the quant lines. With the quant lines, it really, really becomes. Now, there's the retracement back. I think it's very tough to take the short here because you really have this candle. You don't have 2/3 candle close. But here's the trade. And down here, I've kind of blocked it up. Let me take this off. And you have dual quant line confirmation, and you have a nice trade to the downside. I took this trade. This is a trade I took in the room. It went 2 points. I took it with the minor quant confirmation line. The major quant was yellow. And this went down for 8 ticks. Now here's the kind of trade that I have to watch more carefully. This is a break of the 15, of the 50. The 15's up, and by definition, this is our break of the 50. You need the 15 with you, and you have the major quant line with you, and up you go. Now I missed this trade, and if I would have seen it, I definitely would have taken it. It's a really, really nice trade. The quant lines just don't mislead you. They really, really give you a good indication of where the market's going. There's the break, the retracement here, the continuation down for another winner. If you took the signal here and took this retracement and down, you'd still have a winner. This would have given you a lot more heat, but basically it's the same structural setup. There's no way for you to know here that it's going to come back at you, but this would not have stopped you out. It would have come to within a tick of stopping you out, but you still got yourself a winner on either trade. Now you don't have a trade here. You don't have dual quant line confirmation or even a single quant. And here's the C. This is a very dangerous C because it's hanging in the middle of nowhere. Support is nowhere to be found on this chart at all. And I would not take a trade like this. But again, it shows you these dual quants. And I'm going to be much, much more aggressive, especially on the ES, when you have both these quant lines calling green and you do have a trade. And this is definitely a trade. It's just you have the retracement, you have the C candle, you have the quadruple momentum signal, you have order flow and momentum on the candle. It's outlined in blue. You have the best background bias. These are just very far off support and trades we don't normally take. But when you have the confirmation of 5 markets, now all those 5 markets are moving at different speeds. And that was the tough part of it. We have some moving at 3, some moving at 5, some moving at 8, and some moving at 13 on 13 range. So we don't have any trade off the 15. We don't have dual quant line confirmation. There's no trade. No, Heinz, you're thinking of the 3-line indicator. The 3-line indicator has been removed, and what we did was we only used the data it projects onto the price candles. Because what I found was I rarely look down at the 3-line. It's here, you just can't see it anymore. And when order flow and momentum line up, it outlines the candle in blue. It's still giving you all the information, but we don't project it anymore. Because you don't really look at the 3-line and anticipate a turn, because you're going to see that blue outline occur intra-candle. You're going to see that it's going to be outlined in blue probably half to 2/3 of the way. So listen, we could project the 3 line here, then you'd have a 3 line and a 2 line here. And it's just so many lines. We just want it, we only want to project the data that you need to pay attention to. Here, all you need to do is pay attention to the candle. It's going to project the data, and then you're going to see the quant line. Intrabar, I mean, you can see you've got solid green here. You know that if you want to take this trade long, you got the quant line with you. Same thing here. When you have to look down at 3 and 4 tiers of indicators on every trade, and they're all tracing out based on data on the chart, it's very, very tough to trade. Well, this is a very, very tough trade because the 50 is rising. And what you want is either a flat 50 or a falling 50. And this is telling you that momentum long term on your trading chart is to the upside. Momentum short term, based on the modified 15, is to the downside. So you have a C, you have a break, you have a retracement, you do have tool quant confirmation. And this is a very small winner, but I would not take this trade. This is too much for me to take. Now here is where you might consider the trade, because the 50 is rolled now. And now the 50 is flat. So you're not taking it at least against the momentum of the 50. So here on the retracement and the continuation short, you've got a much, much better setup, and you can see what you have is you have a nice winner. Here's a really, really nice trade. I'll move to the upside, down. Here's a C candle coming right off the 50. 2/3 of the candle's above the 50, so it's a break of the 50, and the C candle sitting on top of it. Even though it has a little bit of the candle body below, it doesn't matter. It has broken the 50 to the upside. You've got dual quant confirmation. Up you go. If you're out on a reversal candle, you're back in here for another winner. And here's another trade. Here you have minor quant confirmation. Let me show you this trade right here. Here's a retracement. And it's an aggressive, really, you know what? It's not that aggressive trade. You have dual quant confirmation, and you're just going to be taken out by the wick. But you can get right back in here, and you're right back up for another winner. Same thing here. Dual quant confirmation, retracement, and you're up for another big winner. So you do get the occasional loss, and usually it's like in the room this week on Wednesday, Thursday, and Friday when I had an occasional loss. I usually got taken out by a wick or just a little bit deeper retracement back into the modified 15. The red and blue. These dotted lines here are pivots. And they're broken by a 2/3 candle close. Okay, the red and blue dotted lines. These lines here, okay, what we do is we have an indicator called a consolidation indicator. Let me find a really good example of that. When a market goes into consolidation and starts moving laterally, it's a very, very strong price action pattern. And we have this indicator, and I'll show it to you. Called the consolidation indicator. And what it is it's set to print on 4 bars. We have it on the ES, so the channel has to be very, very, very narrow. And so that when you get a very narrow channel move, it takes 4 candles to print this. But on the 4th candle, you're going to get I have the chart set up as an intra-bar alert. So when I get price action print on the 4th candle, and here's the 1st, here's the 2nd, here's the 3rd, here's the 4th, you get this flicker on the 4th and print on the 4th. And what it tells you is during this period, the power of the bulls and the power of the bears are equal. They can't push price up, the bulls. The bears can't push price down. So price simply moves sideways. Thank you. And listen, this is just something that we saw. But what we saw is eventually when price hits the modified 15, when it hits an area of support to the upside or resistance to the downside, price almost always breaks. And it almost always breaks in the direction of the trend. And here you have background bias to the upside. You have dual quant analysis telling you that the market's going to go to the upside. You have the 15 pushing to the upside. So on this candle, where's the market likely to head? It's likely to head up. And it's the same thing here. You get a print after 4 candles. Here's 1, 2, 3, 4. This candle's right on support. So where's it likely going to break? It's likely going to break to the upside. So you have the consolidation indicator pointing out these channels to you. And I like this indicator so much. It's the only indicator on the chart that I've alarmed. And on my ES and TF chart, I have it give me a doorbell. And on my gold and crude chart, I have it just give me a buzz. So I know whether I'm going to look at an index equity market or I'm going to look at gold and crude. As soon as I get that channel, when it starts to flicker, you get your first little honk. Now, see, here's a period of consolidation, but it's just not in any area that we would trade. I mean, there's no tradable setup here. And here is an absolutely unbelievably good trade to the upside with minor quant confirmation. And that's a gigantic move. And the one market that I will trade I won't trade the Russell pre-market, but I'll trade the ES pre-market. And this is a trade that should end your day. For us, we'd be out at 8 ticks, 2 points. So it wouldn't give us a game closer or a day closer, but it would give us nice money. Here's the same thing. Move to the upside, downside, dual quant confirmation. This is your weakest area of background bias, but you do have bias to the upside. On this particular color, what you have is all resistance to the upside broken. And that's what that's telling you. You have dual quant confirmation, you're not overbought, and bang, you go for a winner. Here you can't take this. This is on a yellow modified 15, but here's the swing around. This is just what you look for. The break of the 15 on a untradeable setup where the 15 is yellow, retracement right back into the 15. You have the minor quant line, order flow momentum, background bias, and up you go. Now here's unfortunately a trade we can't take. Dual quants are yellow, modified 15 is yellow. Just not. We're hoping we're going to get a pullback into support and a move up, but we don't get it. It just goes straight up, and we don't have a tradable entry. On this move up and this move down, can't take it. Modified 15 is yellow, and your minor quant line's red anyway. So there's no way you would take that trade. Now, you could chase it. You see this dot? And your entry could be here. And here you have major quant line confirmation. And it's a chase. Optimal entries here, and you can't take it. But you can take this trade, and up you go from here. On this entry here, you have minor quant line confirmation. That's a winner. Here, you have major quant line confirmation. That's a winner. Here, dual quant line confirmation. Man, jump all over those. Those are absolutely great trades. When you get the break, the retracement right back into support, the candles outlined in blue, it's order flow and momentum. You've got both quant lines. If you want to sit and wait for these trades, you can trade a 15 or a 20 lot. I mean, it's very, very hard. We have not found a single loser. I think we have, actually, but it's very rare you're going to get a dual quant line confirmation loser like this. It's just very rare. This has to break down against the direction of 5 markets. They're all telling you this trade is going to the upside, and it's a perfect trade on your trading chart on a break and retracement to the modified 15, and you have price action and market structure telling you with this dark green background bias that we are heading up, and you've broken all resistance to the upside because the color is dark green. So you got so much going for this trade. This is really the trade where nothing's going against you, where this has to completely fail against every single parameter that we use to take a trade, and they are very, very, very rare when you have a setup like that. That's why if you missed this break of the 15, on this one, it went straight up. We couldn't get the trade. This one, it came right back to support, and we wrote it up. And that's the end of the day. So what I'm going to do is I'm just going to move to a different market. Now, the ES is not easy to trade. It doesn't move that fast, but I tell you, it can really take your head off. But I think we've really tamed it with the quantitative analysis lines. The magenta bars. Can I trade YM? Hold on. I'm just going to. Can I trade the? We don't have a YM quant line yet, Christian, but we just finished our, each quant line that we make for each market has to be different. And if you look here, I'll show you my indicators. You can see that my quant line, where do I have it here? This is the TF quant line. So not only do we have to, in this case, we have to make the indicator by market. So this is a quant analysis indicator line that would only go on the TF. We're going to make one for the Dow. We just finished one for the NASDAQ. We're going to make one for natural gas. Now, if you remember, you get all these additional quant lines as free add-ons. And this is the last weekend we're going to include these quant lines as part of the package. After this, they're going to be an add-on that costs additional money. I mean, if you're interested, we can send you the special offer. But these are so much work to do because they take so much effort, because every single market, like the YM, is going to require the 5 correlative markets to be reset at different speeds, depending upon the volatility and number of contracts crossed on the YM. So the TF and the ES are very, very different lines. And gold and crude are very different lines too. But let's take a look at how well the Russell does. And remember, we made $610 this day. We had 5 winners and a loser. I have them marked on the chart, and you can see all the trades. And these are from the live trading room, the ones I took, the ones I missed, and my loser. And here's the loser I took. And it's right at, now here's 9:30, and we have nothing to trade. I don't like to trade a market open. Now, I didn't have background bias here. And the thing about this trade is, this is what happens. I took the move, I took the retracement, I had dual quant line confirmation, I had order flow and momentum, I didn't have background bias. So I knew I had areas of resistance to the downside to break. And this is really what happens with the dual quant. If you look up here, I got taken out by a tick. Because eventually, with the quant lines go red, this market is going to collapse. If I would have waited for the trade, and you see how it started to consolidate laterally, and I would have taken this trade with background bias here, then I would have had a clean winner. Now, what I should have done was re-enter the trade. But what I always wind up doing sometimes is I'm in shell shock after I take a loss. Like my central nervous system fires. And the one thing I don't do well enough, even after all these years, is get right back in the market after I take a loss. And this is I don't think this was the first trade of the morning, but I took a full 10-tick loser, and I hate it. The magenta bars. The dots are the chase dots. That's where you can take a trade on a yellow 15. And this is a system-generated signal that tells you the optimal trade. You can if you don't grab, you can grab the next candle, and it's very, very likely to be a winner. That's what the dot. The magenta bars. The magenta is the B candle. I just created this by default, so visually I could clearly see an up candle in a downtrend and a down candle in an uptrend. So that gave me a loss right here. Now, I also didn't take this signal, which I should have. And I think maybe the market was a little oversold. I'm dissecting the charts live. I'm not. It's 32 ticks, so it's way oversold. But here's a trade that I did take. It was a break. It was a retracement. Minor quant line was red, and we were down for 12. I couldn't take this to the upside. I really liked the trade, but the 15 was yellow, the quant line was red, and it just didn't predict the trade. This was a potential short, but I didn't like the fact that this was a hanging candle in the middle of nowhere, way, way off resistance. And the dual quant lines called it, and down it went. And this is a trade I took for 32 ticks. It was a move to the upside, down, sitting right on the 50. Remember I said I love the breaks of the 50 and retracements right back. Best background bias, dual quant confirmation, and up the trade went for 32. Then we had a retracement back into support, and I took it back up again for 9. So in this move, we got 40 ticks. And these are real trades. These are not if or maybe trades. This was a short on a yellow quant, so it was a no take. And here's the day. And now we're just getting late in the day here. This is another trade. It's a break to the downside with a minor quant if you wanted to take it. See, the background bias is with you. Order flow and momentum are with you. We were done in the room. So these are trades I didn't even take a look at until now. And down you go. There's no trade here. This is way, way oversold, even though it's a winner. And here we go. This is a trade you can't take. The major quant line's red. Here's another trade. Now it's 15:52 in the afternoon. Market's closed. So let's just go to the next day. Now, if you want to take a pre-market, this is a great trade. It's consolidation. You should wait until the 15 crosses the 50 to the upside. If you took the signal here, you wouldn't have been stopped out. If you took this signal, you got no heat at all, and up you go. I think a pre-market Russell trade is pretty risky. There's not that many contracts are being traded early in the morning. Now this is 9:39 on the minor quant line. You cannot take it. The 50's red, the 15's yellow. Even though it works, it's just not a tradable setup. Here's a short. We can't take it. Dual quant lines are yellow. And when you trade with specificity, you're going to, now this is a way oversold setup. You're not going to trade that far oversold. Now here's a trade that I took. The break, retracement right back in, major quant line confirmation, and up it went for 13 ticks. And here's a trade I took to the downside. Down break, retracement right back to resistance, dual quant line confirmation, down for 10. And these are trades I didn't take that I should have taken. There's your dual quant line, retracement right back to the 50 for a nice win. And this is one, I don't know how I missed this trade. I really don't. This is such a beautiful trade. This went for 18. And I may have taken it. I don't remember because it's marked. Normally, if it's got this on it, it means it was taken. I didn't mark it down below here, but it's hard to see how I wouldn't take this. You look up here, you see the MA diff. The MA diff is reading off the right edge of the chart. And what that's assessing is the difference in space between the 50 and the 15. What we did was we did a 1-year look back, looking at an oscillator. We looked at the stochastic, and what we found was if you take a given entry and you keep all the parameters on the entry constant, and the only one that you use as an independent variable is the oscillator. The oscillator in no way increases the predictive value of your trade. So what I believe in trading is that if some people, when an oscillator is overbought, that's when they believe the bulls are in control and they continue to buy. So they take the market higher when the oscillator is overbought. When it's oversold, that's when they sell. The bears are in control. Others, the other half of the trading group, when you get an oversold signal on your oscillator, they look for an oversold divergent signal to go in the opposite direction. So who's right on that? Is it the people that continue to buy into an overbought market, or is it the people who look for a divergence signal on an overbought market and look to go in the opposite direction? And what we found was that it doesn't make any difference. The oscillator doesn't, with any reasonable predictive probability, make any difference in terms of calling the trade as a winner or as a loser. But what we did find is when the space between the 15 and the 50 begins to get bigger and bigger, the market becomes overbought or oversold. And what we found was that an entry where the MA diff, or the distance between the 50 and the 15, is 18 ticks or greater on an 8-range chart, that's where the predictive value of the entry began to fall. And it just falls a little bit if the MA diff is 20. It falls more when the MA diff is 22. So it's really up to you. We've defined what are the safest trades, the MA diff 18 or less. And that's just, if you look here on the right edge right now, that's the difference between the candle open and the modified 15. Right now it's 9 ticks. That's our overbought, oversold signal. After the slopes, 15. That's the MA diff. That's what I had just described. And then this is the total volume crossed for the whole trading session. If you look on the right, here's volume 2. This 49, if we go to this is going to tell you how many contracts cross per minute. And the magenta is going to tell you the average contracts crossed for the last 15 bars. Really what you want to look at is at that orange number. That's the most important number. Because if you're crossing 150 or 200 contracts a minute on the Russell, you're in good shape. And you look at the MA diff. Now, the reason we have the slope of the 15 is that the slope sometimes will turn before the actual color of the 15 turns. So if we're looking at a really tight trade that we desperately want to take, but we can't take it on a yellow 15, we look up for the slope. And sometimes as the candle just nears completion, you'll see that slope go red or go green, and we've got the okay to take the trade. Everything on the chart has a purpose, or we get rid of it. We don't want any extraneous stuff or you to have to assimilate information that's not going to increase the value of your increase the predictive value of your trade. So right here was the 18 tick trade. I'm pretty sure I took it. I'm not 100% sure because I don't have the 18 below it, but I also have this box, and that's just it's a gorgeous trade anyway. Doesn't matter whether I did or I didn't. Here's another terrific trade. You have the move up, you have the retracement, and you have the move up here. Now the reason I did not take that, and you don't have dual quant confirmation, I take that back. Let me just move over here. Here we had 5 winners and a loser. You see the channel, the move up, the move back. You're trading a really, really nice area of consolidation that moves right into support. You're in here, dual quant confirmation, and up you go. And I'm skipping a lot of junk here, just a lot of static, because we don't trade a yellow. We don't go short above the 50. We can't take this move to the upside because the 15 is yellow. The only thing that we can do is wait for the market to move up and then retrace back, and there's our trade. Not that I'm skipping all this. There's just no setup here. We can't possibly take a yellow 15 long. We can't take a red 15 long. And we just don't have anything to trade until the market declares itself. And it does here with about 6 or 7 candles, then comes right back to where we want it, and we ride it up. And that's what we're waiting for. If you can get 2 or 3 of these a day, you're a very, very big winner. Now here you have no background bias. You have to be more careful. Here on this short, right here, both quant lines are yellow. Here, both quant lines are red, and this is a very small winner. Here is where you're going to have to take the trade with the chase dot. Now I have a feel with the chase dot, and you got yourself a nice winner. Now this is another winner. It's a B. It's a retracement. Whoops. And up you go. Now the age-old problem that I've never solved, and I don't think I ever will because there is no answer to this question, is whether or not you ever trade into an unbroken pivot. This is our pivots. It's a really nice pivot indicator. I have it on a very low sensitivity. It only traces out major swing pivots, and it breaks with a 2/3 candle body close above or below, depending upon whether it's a red or a blue pivot. And there is no answer. I mean, you just have to know that if you're going to trade it into an unbroken pivot, excuse me, you are going to acquire additional risk. This is an area where if you're moving to the upside, a lot of sellers are sitting. They turned the market before. Are they going to turn it again? I'll tell you, after trading for 15 years, I just do not know. The more a pivot's hit, just like a moving average, the weaker it gets. If you see a pivot's been hit 2 or 3 times, you have a much better probability of moving through it on the fourth move through. But I'll tell you, I've seen so many trades bounce off these pivots like they're steel plates that I'm very, very hesitant to trade through them. So I might have stood aside on this trade simply because I needed to get through this pivot to get to a first target. And that's really all based upon your own risk tolerance. And if you look here, right here, it kind of bears out. Here's the move down. I'm sorry. Here's the break of the 15, and here's the retracement. Now you have major quant line confirmation to the upside to take this trade. Everything is really with you. This is the weakest background bias color to the upside, but it's still green. It's still blue. You've got order flow and momentum. You've got your major quant, and the trade just goes right to the pivot and bounces off. You take it here, it goes right to the pivot and bounces off. And you still have the major quant confirmation. Here, you lose your quant confirmation. Here, you get it again. You move to the upside and down, and it hits the pivot, and it bounces off. So it's very, very tough to trade into an unbroken pivot. And that's why I don't do it. Because you would have had a whole series of losers here on good signals. But I always recommend that when we trade, I stand aside. And a lot of times these trades go through pivots and they go 35 ticks. But if you stay, you always want to take the more conservative approach. You want to trade with more specificity. So if these would have been winners, so what? You would have, you still are going to, if you have the patience and you have the discipline, the market's going to come back and hand you a very, very conservative trade where you don't have to worry about pivots. And this move up here is on a yellow 15 without a chase dot, and we can't get this market to the upside. And here's a gorgeous trade that goes into the pivot and just walks through it. Now, we don't have dual quant confirmation, so it doesn't matter. And I would not trade without at least the major line or the minor line. All right, let's just look at this day. Here's a trade that I took because it's marked out. I'm going to come back and I'm going to answer all those. I'll answer all the questions. Move to the downside, and the market went up for 9. And that's a trade I took in the room. Okay. And here's another trade I took. Moved through a yellow 15. I just waited for the retracement here. I took it right off support, and we went up for 9. And these are trades I know I took. They're all marked out. There's nothing to trade here. We can't take a move through a yellow 15. Actually, this is a green 15. This actually was a tradable setup. I just might have missed it. This is at 11:49. I can't take anything here. That's a green quant. And now we're just moving on oversold. I think the MA diff here is quite big. It's 23. Optimally, we want it to be 18. And it's the end of the day. It was Friday. It was a quick out. And so that's really how they work. I could show you another market. I don't want to keep you that long. It really, really helps on crude. It helps immeasurably on gold. Even though we have one line, I took this for 5. It was a small winner. This was another trade I could have taken. Some of the trades are just tough to see when I'm trading 5 markets. Here's another great trade. I did take it. It went 14. There's the retracement and down. It's all marked out. Got 14 ticks off of that with quant confirmation. And that was the end on gold. Let me go back one more day on gold. I took this for 8. Retracement, move down, quant confirmation. This one, I swear I wanted to roll over and kill myself when I missed this trade. You know, I was so happy with the 8-tick winner. I just, that's the toughest thing is for me to stay focused after a winner. If it's a loser, it usually comes right back to give you a winner. If it ticks you out by 1 or 2 ticks, it's going to come right back. Look at that setup. I mean, that's a hand-me trade. That was a 41-tick trade. We'll go back a little bit. Here was an auto trader win. We're now integrating the auto trader of the quant lines. I took this trade up, back, up for 6. The auto trader that was a 31-tick winner for the auto trader. It doesn't trade that much. Here's a perfect retracement to the downside with quant line confirmation. You could have taken the same trade here. Quant line confirmation. 2 winners. And I'm just looking now at just here's a chase dot and a move down and a winner. Here's another move down and a winner. let's see, here is a chase dot and a small winner. But here here is where you start getting right into pivot issues. And you can see you just don't want to trade into these unbroken pivots. They cause so much trouble. Here was a 12-tick winner, and this was before we had the quant lines, going back pre-quant line era. And if I would have had the quant line, I wouldn't have taken the trade. But it was a risky trade, and it's okay. I don't mind letting winners go by. As long as the trades I do take are successful, I don't care about the winners that go by. And here, look at this beautiful trade. Not only is it coming out of consolidation, sideways motion right into support, you have quant line confirmation. Nice, I like this light blue background bias. It means that your 15, your 50 are all moving in your direction. Price action and market structure moving in your direction. The only thing, the problem that you have with this background color is you have some resistance to the upside that needs to be broken. But this is a terrific trade to the upside. And the market just will hand you these trades over and over again. So if there's a trade that gets past you simply because you don't have confirmation, it doesn't matter. Here's a chase to the downside and a winner. Here's a trade into the vicious pivot that would have given you a loser. This pivot turned the market right against you. That's why I just don't trade into them. And look at this trade. I mean, really, it's late at night. You're not going to be trading at 3:46 in the morning. But look at that trade. So I just really wanted to just see that if you're able to quantify all the elements that create a predictive value on the chart, and the most important thing for you as a trader is to understand, like there's a lot of systems out there that give you green dots for a long and they give you red dots for a short. And they're a little more, and they're black boxy kind of systems. They use an oscillator, which I don't think has any predictive value at all. Maybe they use a MACD on one time frame. What you must do, I think, in order to get on top of these markets and beat them up, because they are really brutal, is you have to trade multiple time frames. If you want to look at charts on multiple time frames and set them all up in a row, you can do the same thing that this system does. But you're going to have to set up 3 more time frames. On an 8 range, you're going to need a 13, you're going to need a 21, and you're going to need a 35. And you're going to have to look at all of those charts at the same time. You're going to have to look at the direction of the 50 and the 15. You're going to have to look at support, resistance, and really that's what they are. And you're going to have to look at price action to see if the market's making lower lows or higher highs. If you don't want to do that, the background bias does it for you. It gives you the power of multiple time frame analysis without using that. And we look at what I think are very important are momentum and order flow. Order flow is a supply and demand parameter. When order flow is red, it means that there's more supply than there is demand, so the price that people are going to offer it up to you at is going to be cheaper. And the price is going to fall. And that's a multiple time frame analysis. Momentum is a multiple time frame analysis. That's what that red outline does. So what we've done is we really have harnessed market structure, given you an entry, and then you look down to get quant analysis confirmation, and the 3-line confirmation is right on the candle. You have order flow and momentum. And when you get trades like this, they're not marginal trades. These trades work, and they work with an incredibly high predictive value. I mean, the positive predictive value of a trade like this is really close to 90%. It's just a matter of whether you have the patience to wait for them and not take marginal setups. Here was a plus 10 I got, and then I got a break even on the trade. And here was a loser. I'm not going to hide them either. Now, I didn't have the quant line here. But this trade didn't go anywhere, didn't have market structure, didn't have a pivot to hold it to the upside. It just didn't go. And not every trade is going to go. I lost 7 ticks on it. But if you stay focused and you get 3 or 4 wins, it's going to wipe that one out. And gold is by far and away the toughest chart to trade, without a doubt. I mean, look at these trades. That's a 38-tick trade right here. And this is it. I'm blocking it. This is a trade I took in the room. Let me take this out because I have it all marked out. This is a 28-tick trade in the room. The move up. This is exactly almost identical to the one I was telling you about before. Went up 28 ticks. This is what, thank you very much. I appreciate that. That's what you're looking for. So really, I mean, I think that what I think the software and the system give you all the data that you require to become a successful day trader. All on your end that you need is you just need a lot of my software is always offering me free offers, my virus thing. All you need to do is have a lot of patience, wait for the good setups, never fret if the market, we have huge numbers of people in our room on free trial. And I'll see a trade go by that's a 25 or 30 tick trade that we can't get into. And you know what? 2 or 3 people on the free trial, they'll leave the room. And those people will never be successful traders because they want to be in on that 30-tick move. And the fact that our system didn't set up for it is enough to say to them, you know what, I'm not going to be part of a system that's not going to get me into all of these big moves. Well, you're never going to get into all the big moves. If you want to get into to a large number of successful moves, that is what your goal is. It's not to get in on every big market move. If you do, you're going to pull in losers. Now, on Friday, I had 2 losers really ticked out by a tick or 2, and I had 6 winners. And I made $70 because I could not get a home run. Every trade went 6 or 7 or 8. I just got little winner after little winner after little winner. And it shows you on Wednesday we made 600. On Thursday we made just under, I think, 400. On Friday I couldn't get a big one. And it just shows how it is never about the number of winners. We had 6 winners, but I had 2 losers, and they were really on crude. They were both, one, I was taken out by 1 tick, same move, I taken out by 2, and then crude dropped. I think it dropped like 60 ticks, but after that, we couldn't get in. It just went straight down, didn't retrace. And by the time it did retrace, it was that, the MA diff was like 30 or 40. So it's never about the number of winners. You can acquire 8 or 9 winners in a day, but if you don't keep your losers down to 0 or 1, you're never going to get there. That's why trading is all about specificity and not about sensitivity. It's about limiting number of trades and about really, really going for the winners and letting the marginal trades go by. And the trades that do not set up and give you all of the components that you want to take a successful trade, just let them go and don't ever worry about them. The thing that is irritating to me as a trader is when I get a beautiful trade like this and I miss it and I'm looking at the wrong market, or I'm tying my shoe, or I'm looking across the room. Those are the things that really, really bug the heck out of me. It's when a great trade is missed. But if you let a trade go and you've made the assessment in your mind that the risk based on your risk tolerance is too high, if it's a winner, don't even look back at it. The toughest place to be, I think, is on the right edge of a chart. The right edge is brutal. And when you're 3 or 4 candles away from that right edge, it's a lot safer to look back and say, yeah, I should have taken that trade. That's the thing. And just don't trade out of animosity and vengeance to grab the market back. Because when I do that, I always create more panic and havoc than when I just stay focused and wait for the trades. So that's really it. I'm just going to look really quickly and see if there are any other questions. We're going to have quant lines. We've already been asked to create a quant line for the 6E, and we will. Heinz, what we're going to do is, if you're a member and you want a quant line, we will make it for you. We're gonna put that offer out for the next few weeks because we know all the correlative markets. It's simply a question of creating the line, because the only thing that we have to do is we have to determine what speed to set the markets at. We have about 60 markets that we analyzed, and I know what I need to do. I really like the 6E. And if you want to trade the currencies, you can. We'll make a quant line for you. We were asked to make one for the NASDAQ. We just finished it. We've been asked to make one for the Dow. We just finished it. The DAX is another one we're going to go back and get. We're eventually going to have maybe 10 to 12 quant lines. And we're going to lease them or sell them individually. This is the last weekend to get the software where you'll get every single additional quant line that's either out there or we're going to add in as a free add-on. This is it. So let me just now there's really, honestly, there's no system that everybody else would come out with a 2.0 version, but if you own the software, you're getting these quant lines as we put them out. And let me just go to our website here quickly. If I could type. Hey, and today was Mother's Day. Hope everybody had a really nice Mother's Day. You click here for a free trial. If you're interested in our special, just send me an email. Here's our Contact Us page. If I could find it right here. And just contact us, and I will send you the offer, and it's yours. It's you can decide whether you want to take advantage of it or not. It's totally up to you. There's lease options and there's purchase options. If you go for a lease option, you still get all the quant lines as free add-ons. And listen, we're always looking to make the system better. We're always looking to push forward with it and create new ways of giving us an advantage over all the other commercial traders, so we can take their money, and at the end of the day, they don't go home with ours. So listen, everyone, have a great evening. I look forward to seeing. I see a lot of people from the trading room in here. I look forward to seeing everyone. The Auto Trader, Heinz, we're adding the quant lines into them. We just finished the ES, and we'll be re-releasing it. That's really separate, the autos. If you're interested, just send me an email, and I'll send you all the information about them. But we're going to put all the quant lines into the autos as an additional parameter that must be met in order for the autos to take a trade. We want to increase their predictive power as well and get them taking more winners. They're going to take fewer trades, and we're also ES. We're trading at 21 range. It wasn't working. We've decreased the ES speed to a 5 range, and with the quant lines, our market replay data on the ES is really stellar. It's really spectacular. So on the autos, we're going to really be rolling out a 2.0 version. If you got the auto now, you'll get the 2.0 version. But you're going to get the better auto if you lease. So, okay, everyone, have a great Mother's Day. I look forward to seeing everyone in the room. If you're not in the room, just send me that. Go to the free trial request. We'll send you a username and password early Monday morning, and we'll have you in on Monday. So, everyone, have a great Mother's Day, and I'll see everybody tomorrow. Take care, and thank you much for your time. I really appreciate it. Have a nice evening.